Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin using logarithmic regression. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, logarithmic regression is the best way, in my opinion, to model the price of Bitcoin. Now, I know there are definitely other models out there that are more optimistic than logarithmic regression, but one of the reasons why I like logarithmic regression is because it basically assumes that you will see diminishing returns and that the more impressive returns would have happened earlier on, and then as time goes on, the returns are diminished as a function of time. Okay. Now, the logarithmic regression bands sort of exist outside of market cycle theory, right? And I've mentioned before, I don't trade market cycle theory. I just trade the risk levels, which is something we've spoken about before on this channel, right? What is the risk of Bitcoin? But one of the interesting things is when you think about the logarithmic regression channel, what we've seen with these two is that they've actually held up relatively well. Okay, we presented these on the channel years ago. I think we first presented them sometime over here on this channel, and since then the price of Bitcoin went down into the regression band. We stayed at the quote unquote fair value fit to non-bubble data, which is the sort of the undervaluation region. We stayed there for quite a long period of time. We then just rocketed it up. We rocketed all the way up to the very bottom part of the upper logarithmic regression band. And we held resistance here, okay? Following that, we came back down. And what's interesting is, we sort of came into no man's land here. If we zoom in here, we came down into no man's land where we're not at the top, but we're also not at the bottom either. And so I think that the best way to think about it is sort of no man's land. It's not obvious in the medium term whether we should be heading up or down. I certainly didn't know. I mean, even back over here, we talked about the implications if, what happened if Bitcoin goes back down to say $20,000 or something. There's always a possibility, even if it didn't play out. So when thinking about Bitcoin and managing a long-term investment, I think that the logarithmic regression channel is the best way to view this. Okay, so generally what I assume is when we hit the top of it, it's time to take some profits. Okay. And back in early 2021, I did certainly take some profits, and I said we're probably going to go down for 3 to 6 months back then. Unfortunately, I didn't take any back over here. Okay, I just be completely honest, right? I didn't. But what it goes to show is that in general, over the macro scale, the fair value fit to non-bubble data will increase more or less monotonically. So for instance, what do I mean by that? Well, how long would it take for the current price of Bitcoin to be equal to the fair value line fit to non-bubble data? Okay, now to distinguish, there's two logarithmic regression fits that we talk about the fair value. One of them is fit to all data, and then one of them is fit to non-bubble data. And the one that's fit to all data says that the fair value of Bitcoin is around $33,000. The one that's fit to quote unquote non-bubble data says that the fair value is around $20,000. So there's a difference. One sort of ignores bubble phases, and then one doesn't. One just sort of says, all right, they're all the same. It doesn't really matter. We're not going to, subjectively identify what's bubble data and what's non-bubble data. But one of the interesting things is that we more or less are bound between these logarithmic regression bands. And interestingly enough, back in early 2021, this was a difficult phase because the risk levels were high on Bitcoin. We were in the upper logarithmic regression channel. Everything was screaming that we were too far extended, but it did not stop a lot of people from thinking that we were just going to blast off to several $100,000 in the short term, right? It did not stop people from thinking that. And we ultimately got rejected back down. Now, the amount of time it would take for the fair value to equal to the price of Bitcoin today, all you have to do is sort of go over on this line and then figure out when would the sort of the non-bubble fit equal to the current price. And you can see that it would basically take until the summer of 2023. That would be for the fair value to be equal to basically the price of Bitcoin today. But one of the interesting things is it's a very difficult thing to navigate because, for instance, if you assume that every time you go up to the top of the red band that you have to go to the green band before putting in a new all-time high, then you would have been completely wrong because then Bitcoin went to $69,000 after going to 64K. So to operate deterministically like that is not necessarily the best way to operate. With that said, I want to show a couple of different metrics. So one of them is the price divided by the bubble data. So basically, if you're just looking all the way up here, divided by the red line, one of the things you'll note is that to get to the top of it, the last two got us there, right? We went all the way to the top. The most recent one did not, or sorry, the one in 2011 did not. And then the most recent one only got us to about 0.7, meaning, the price divided by the top of the upper logarithmic regression band only was about 0.7. Okay, so we didn't actually make it there, unlike 2017, at least so far, unlike 2017 and unlike 2013. 2011 made it to about, a little bit higher, maybe 0.75 before coming back down. Now, from this perspective, it stands to reason that, there could be another push coming that'll take us to the upper logarithmic regression band. So this is one view of this regression channel. The other view is to take the price divided by the non-bubble data, and you get something that looks like this. And one of the things you'll notice is this is the price divided by the fair value. What do you notice? The extension from the fair value diminishes with time. Okay, right? It diminishes with time. We noticed this back in 2019. We talked about it in 2020. We showed this chart back in early 2021 when we were getting pretty far extended here. And the point is to say, look, the extension from the fair value tends to diminish with time, okay? And this is better viewed on a logarithmic scale, and you can, I think, see it a little bit better. And what you notice is that, the extension from the fair value back in 2011 reached, somewhere all the way up here, really close to 60. This one back in 2013 reached around 24, 25 or so. So we went from 55 or something down to 25. This one took us all the way down to about maybe just over 10 or so. And then so far what we've seen this time is right around 4.5 or so, okay, in terms of the extension from the fair value. Now, one of the reasons why I think this chart is interesting is because, and I think this is what people sort of fail to understand sometimes, and I think a lot of the reason for that is me just knowing not doing a great job of communicating it, is that, remember, the fair value is in fact a monotonically increasing function, right? So it does monotonically increase. Therefore, even though the extension from the fair value decreases, because the fair value is going up, even if it decreases each time we have a pump and Bitcoin goes into a parabolic phase, even though it decreases each time, we're still going to higher prices because the fair value has increased significantly. The best way to illustrate this is the fact that the price divided by the fair value reached a higher extension back in April of 2021 than it did in November, despite the fact that in November we went to a higher price. Okay, so I'll say that again. Despite the fact that Bitcoin went to a higher price in November of 2021, the extension from the fair value was not as significant as it was when Bitcoin went to 64K about half a year before. The reason for that is because when Bitcoin went to 64K, the fair value was only around 13K. When we went to 69K, the fair value was closer to around 18K or so. So again, since the fair value has gone up based on non-bubble data, then it made it so that the extension from the fair value was actually less, even though we went to $69,000. I think that's worth pointing out. So the point is to say that if you assume that just because this sort of hit this imaginary trend line up here, which we'll talk about in a little bit, if you assume that just because it hit an imaginary trend line, it can't put in a new all-time high, then this clearly is proof that that is not necessarily the case. For instance, if Bitcoin had another pump and say went up to this level, it could still theoretically put in a new all-time high, even if the extension from the fair value isn't as impressive as it was at 69K or at 64K. One of the ways that we can view this, and I was sort of playing around with this sort of imaginary line, is okay, well, how do you look at this stuff? Okay, this is on a log scale. If you connect peaks 1 to peak 2, you get something that looks like this, right? So if you connect the first peak to the second peak, and then try to figure out, well, how well would it have done at predicting a theoretical third peak? It would have done okay, right? It would have done okay. You can see we would have in fact overshot it a little bit. If you were to connect the first peak to the third peak, like this, you can see that it also would have done okay, at least in identifying 64K. And again, when we went to 64K, it was fairly obvious that the market was too far extended. You know, this was when Bitcoin was up like 20x in only a year. And a lot of the longer term hodlers were in fact taking profits, which is interesting because the move to 69K, a lot of long-term holders were not taking profits. My thinking on that is, you know, the reason is because if you were a long-term holder, if you weren't going to take profits on the move to 64K, then there's probably a good chance you weren't going to take profits on the move to 69K. So the people that wanted to take profits probably did so already during the first run up. And then the people that wanted to take profits the second time were more than likely a lot of shorter term traders, not long term traders, because it would have been hard to have more Bitcoin that you've been holding for a long period of time if you sold it all back in early 2021. So I think that makes sense. And that's why we see, that's why we see a lot of longer term holders sort of taking over now, because they've been accumulating Bitcoin for the last 6 months or so, and they did not sell. A lot of them anyways did not sell at 69K. Namely because the ones that were going to sell would have already sold back at 64K, and perhaps they were reaccumulating, and then now they're just blindly reaccumulating until there's another parabolic rally. But when you look at this chart, you can say, well, what if you connect the first peak here to the third one? How well would it have done at predicting the 64K local top? Pretty good, actually. And this is yet another reason why back in April, the market seemed a bit extended. Now, one of the things that I want to mention here, so if you connect peaks 1 to peak 2, you get something that looks like this. And so you can see that it's not really a perfect fit or anything. Like it doesn't really give a great fit as to the third one, but it gives you somewhat approximate. And then the fourth one, we've been above it twice now, right? We came above it here, and then we came above it again. We most recently got another push back up to the upside. But I think the thing to think about here is to not act deterministically on anything, okay? There's a lot of people here that are acting deterministically, and they're saying things like Bitcoin has to do this, or it has to do that. Like it either has to go to 100K next month, or it has to go to 20K next month. Look, no one really knows, right? No one really knows. And again, if you had used a metric like this to say that 64K was going to be the absolute top for the next 4 years, then 69K came not that far off later. So you have to be careful. I mean, you certainly have to be careful. But what I will say is this: in the future, if you see the extension from the fair value come back up to the trend line, then it might be worth taking some profits off the table. I mean, I can't tell you what to do, of course, but if you see the valuation of Bitcoin double or go up 2.5x or something in the short term, and we're back up at this regression band for the third time, then it might be time to consider what the risk is. I mean, I'm not offering financial advice. I just want people to recognize that the extension from the fair value should decrease every time we have a move that takes us above it. Now, here's the catch to all that. There's a catch to it. The problem with this is that eventually this is trending towards 1, okay? Meaning the price would just be equivalent to the quote unquote fair value fit to non-bubble data, which is probably not what's going to realistically happen. Like eventually we will likely break out of this downtrend channel, okay? Eventually. It's just hard to know when that's going to be. But furthermore, one of the reasons why this will become somewhat irrelevant at some point is because this needs to be refit every few years to really hone in on what the fair value of Bitcoin is fit to, quote unquote, again, non-bubble data. And this is something that you have to refit it every time we go back into that band, all right? So, I think the point here is to say, going back to the chart over here, is when you look at this and you try to figure out, okay, well, what's going to happen? Are we going to go back to the bottom? Are we going to go to the top? Look, no one knows, right? I have no idea. I don't know if we're going to go to the top in the short term. I don't know if we're going to go to the bottom in the short term. We all have our theories on what's going to happen, but at the end of the day, no one really knows. And to a large extent, it's outside of our control. And by to a large extent, I mean it's completely outside of our control as to what's going to happen to the price of Bitcoin. But I will say this, in the same manner that we came up here to the top of the regression band, right? We sort of got rejected off the top of it. You might also wonder if we won't actually go back down to these levels, because greed works both ways. Okay, so over here, a lot of people took profits as we entered into the upper logarithmic regression band, and a lot of indicators were screaming that we were ahead of schedule. And some people were not greedy, right? And they went ahead and took profits rather than waiting for 100K like everyone was preaching back then, or a lot of people were preaching back then. Some people just took profits. In the same manner, there could be people that are always waiting for these values down here, but perhaps we bounce off of it sooner than that. And then you could argue that people are being greedy in terms of trying to wait for much lower prices that might not manifest themselves at all. Especially as more and more people sort of become in tune with the general direction that Bitcoin is in fact heading. So what I would say is, do not navigate the cryptoverse in a very deterministic manner, because if you assume that anytime we hit the top, we always have to go to the bottom, well, you would have been mistaken back in the summer of 2021. But in the same manner, if you assume that we can never go back down to the bottom of the regression channel, right? If you never assume we can go back down here, then you might not be setting yourself up to take advantage of a future dip to those levels whenever it does occur, right? Whether it occurs in the next few months or whether it occurs 3 years from now, you always want to make sure that you can take advantage of something like that. So I would say, do not operate deterministically, right? Do not operate deterministically, but have a plan no matter what happens. We could come back down and then bounce right off of it and go back to the top. This is a possibility, in fact. And I will point out too that, to go from here to here, it only took about 3 years, in fact. You're talking about from December 2017 until February of 2021. That was 3 years, not 4, to get back up to the top of the regression band. So far, it has been about 1 year since we've been there. Okay, it's been about 1 year. So, I look at this and I say, well, I'm not going to operate deterministically. I'm going to assume that anything in these bands are completely fair game, whether it means we go to the top, whether it means we go to the bottom. Okay? On the way that I would navigate that is, if we go to the bottom, then I would continue to load up on Bitcoin for as long as I can until it leaves that regression channel, right? Or if it goes to the top, then I would probably be looking to take profits, DCA out. Okay, so the best way to navigate crypto is to have a plan, to not operate deterministically, to not say that something has to happen, but to plan for all scenarios. And this is what we will try to continue to do. Remember, do not operate deterministically about anything, but if anything you're going to operate deterministically on, in my opinion, it should be that Bitcoin trends up with time, which is what we've seen over the last decade. Okay, so again, in the short term, hard to really say what's going to happen. I would expect the price of Bitcoin to generally stay in this channel. If you're curious what it looks like as time goes on, the upper band on the upper logarithmic regression channel by 2025 will be at $250,000 to $375,000. So $250,000 to $375,000. By the summer of 2024, it'll range from around $190,000 to $284,000. In summer of 23, it'll range from around $146,000 to $217,000. In the summer of 22, the upper band will range from around $100,000 up to $150,000. So the point is we don't know when we're going to go back up to the regression band, right? We don't know. We can't know. But whenever it does happen, it likely means that we then have to go back down for a while, which is one of the reasons why we said back in April that we are too far extended. We need to go back down for a while. And then we dropped about 55%. Then we had this move back up to 69K, which was a very interesting move. We held the line at the 20-week moving average, then we bounced up to 69K, and now we've come right back down. Now we're back at around $42,000. So we're sort of back in no man's land here. And again, if you're wondering how does Ben navigate this, like how does Ben think about this? What I think in general is that if we come back up, then I would try to DCA out of the market. If we come back down, then I would DCA heavier into the market. Okay, this is all I would do. Okay, this is how I see the market. We are still in no man's land right now. Okay, we could go either way. There's no clear direction. If we were up at the top, I would say it's a lot more likely we go to the bottom. If we were at the bottom, I would say it's a lot more likely we go to the top. We're still in the middle. Okay, and the last time we were in the middle, we trended back up to the top. We didn't make it to the top, but we trended that direction for a while. Now we've been trending down for a while, but we haven't actually made it to the bottom of this regression channel. So it's really hard to say what will happen in the short term. What we can say is that Bitcoin generally trends up with time, that you need to have a plan and generally assume. I know there's some models out there that don't account for diminishing returns and think that we're going to see like $1 million Bitcoin by 2024, 2025. I would say that's very unlikely. I would say it's a lot more likely that, as you can see, this upper regression channel is more or less, I think, going to govern what the theoretical price of Bitcoin could be as the years pass. Okay, so for instance, by the end of 2023, let's take it 1 year at a time. By the end of 2022, by the end of this year, it says the highest price could be 168K, the highest price. By the end of this year, it says the lowest price could be 20K. so from 20K to 168K. By the end of 2023, it says that the highest price, according to this, would be around 240K. The lowest price could be around 31K by the end of 2023, somewhere between 31K and 240K. It all depends on kind of the market cycle theory stuff. By the end of 2024, it says that the highest price could be around 300K, 330K, and the lowest price would be around 47K. So what it says is that by the end of 2024, the lowest price that this would yield would be higher than the current price now. So what this means is that investing in crypto, you have to be of the macro mindset, right? You have to view this on the order of years, okay? I know late 2022, thinking about late 2023, all these things, they seem like they're so far off, but it does actually go pretty quickly when you look back on things. So what I would say, outside of market cycle theory, because people keep asking me about market cycle theory and stuff, and you guys obviously know my opinion, but outside of market cycle theory, what we need to think about is how do you navigate it no matter what happens? Like putting everything aside, how do you navigate it no matter what happens? And I think the correct answer is to not operate deterministically about anything, but just assume that Bitcoin trends up with time, but it does so on its own schedule. Okay, so sometimes it'll go to the top of the band, sometimes it'll go to the bottom of the band. We don't know exactly when those phases will occur, but whenever we go to the top, it typically means that taking profits is the best way to go. And whenever we go to the bottom, loading up tends to be the best way to go. Again, right now, we are still very much in no man's land, as we're not in the bottom regression band. We're also not in the top. So try to come up with a plan, stick to it for the long haul, and we'll continue to follow this every step of the way. Thank you guys for tuning in. If you guys want access to all this stuff, check out intothecryptoverse.com. Also, make sure you subscribe to the channel. Give the video a thumbs up if you haven't. Click the bell icon to turn on notifications, and I will see you next time. Bye.